leveraged ETFs than it even is with stocks. Please don't be trading these on days that are choppy. You know, FOMC day when Uncle Ben comes out and tells us about the interest rates. Sometimes those days go up in the morning and then at 11:30 Eastern time they flatline. On Fed interest rate day, they just flatline into the announcement at 2:15. And that announcement comes on all the financial stations. And then everything breaks loose after that. And a lot of times you can watch the S&P futures go straight up, come straight down, go straight up, come straight down, depending on the environment of the economy when that interest rate is announced. That is not a good day to be trading leveraged ETFs. Also, please don't hold these overnight in volatile markets. These funds were designed, and I read the white papers, and it's very true. These funds were designed to match a multiple of the underlying index, in this case 2 times the return of the multiple of the underlying index. They were designed to return that on a daily basis. Now, I read a lot of studies, and they've done studies where you hold the S&P Ultra ETF, where you hold it for 3 days, 7 days, and 30 days. Now, it can be, if the market's soft and sweet and just going straight up and nothing much is going on, you could hold the leveraged ETF, S&P ETF, for as long as a month. And they say you shouldn't hold them longer than overnight because they can't guarantee you anything after that. However, in a non-volatile market, you can hold it and you can end up with 2 times or very close to it the underlying index, the S&P 500 index, and it would be pretty close to good, and you didn't have to sell it. Okay, so it can happen. But the longer you hold these ETFs, the more chance there is that they're going to move away from the objective of the 2 times the multiple. It's just the way the critters are created. Now, some people are like a little upset about that. And my question is, golly, we go to the grocery store, we buy a jar of mayonnaise, and it says on there, best if used by June 2010. After June 2010, I throw it out. I'm not angry at Hellmann's because their mayonnaise didn't last longer. So I can't be angry with ProShares or these other funds if this critter was designed to do one thing and it's not doing what I think it should do. So it's to keep that mindset in mind and know that what we need to do is use these for what they were intended. Hold them for a day, maybe 2 or 3, depending on the market environment. Now, next one, always monitor the underlying index, and I can't tell you how important this is. It's important to monitor the right one. ProShares Ultra ETFs, and even inverse ETFs, uses Dow Jones U.S. stock indexes as their underlying indexes. They don't use select sector spiders. They don't use the S&P indexes, excuse me. They use Dow Jones U.S. indexes. All right? So, if you say, all right, I need to know, the Dow Jones U.S. indexes are not the easiest things in the world to find. I looked and looked and looked, about drove myself bananas trying to find these. For some reason, it was hard for me to do. However, there's a nifty little trick you can use. The iShares ETFs, they use the Dow Jones U.S. Indexes. So you want to use, if you can't find the Dow Jones U.S. index that you're looking for and what's in it, the holdings, you can use an iShares fund. But you need a leading indicator with these. You need a leading indicator. I can't say it enough times. And actually, that's one of the benefits of these exchange-traded funds is that it's so easy to find something that will be a crystal ball for you. And I'll show you how to do it. But make sure you're comparing apples to apples. Like, if you are watching the XLF, the Select Sector Spider ETF, the financial Select Sector Spider Financial ETF. If you're watching that and trading the SKF, you're not which is the ProShares Ultra. It's the inverse leverage, the ultra short financials. You're not trading. You're not watching the right things together. You should be watching the IYF that's the iShares Financial. You should be watching that with the SKF. Okay, just stay with me, but please try to use one that has the right underlying index. Of course, the best thing to use is the underlying index itself, if you can find it. And they're not that